This is our Forex blog for August 22, 2011. And like most days, we really want to buy the strong pairs versus the weak. I didn't leave this running over the weekend. Remember, one of the new tools we have is build your own color trend strip, which is right here. I just brought it up at around 11:30 today, and it keeps up to date in real time. But I did run it at home, and the dollar was pretty much weak for most of the day until about 8 to 9. Same thing with the yen, and the euro was one of the stronger ones, especially at 3. It had a little bit of weakness. Some strength came back. And when the real time, the last 1 to 3 hour, depending on how you build it and what settings and weights you put in there, when the real time matches, the intermediate time frame trend, which matches the daily, weekly, and monthly, you really get some good trends. The euro pretty much was extremely strong here at 3 across the board. So the euro dollar would have been an excellent one to be looking for buys around 3 o'clock. And you can see, here's 3 o'clock. The price came down to one of my Fibonacci areas, found support, and broke out, and went up pretty decent number of pips, 40 or 50 pips. If you decided to use a range bar, if you missed the first entry into this right around 305, 302, you would have, and keep in mind that the trend now had shifted down. Whenever I bring this up, it paints the real-time trend for daily, weekly, monthly across all the past bars. Didn't look like that earlier. It was I didn't run it live over the weekend for multiple reasons, but we're going to put up a euro dollar range bar chart. Let's say 6 pips per bar. This is going to give us a lot clearer view of what you could have traded at 3 o'clock when the euro was one of the stronger ones and the dollar and the yen were the two weakest. At 3 o'clock there really was some incredible moves to be made on this. Here is the 305 bar. So 3 o'clock really was on this bar right here. And it's pretty close to the beginning of this trend. But even if you missed the first entry, which is oftentimes the best entry, you had a 2-bar pullback. The euro was the strongest and dollar and the yen were the two weakest. One of our range bar entry signals is 2 to 5 bars down against the trend. The first bar that closes up, you go long with your stop right underneath here. So you really could have went long a little bit under 43.70 here, and it went up a little bit. Every time it goes up and kind of consolidates, you want to yank your stop up. And then it really just took off. And you have another sideways rectangle here, and you might have gotten stopped out at that point. You can also use the chandelier stop to get yourself out, or the parabolic stop, or Intella stop. And on the range bar charts, I like to use 2.0. Since the pips per bar is 6, you're basically trailing it by, in this case, about 12 pips. So, you might have got stopped out here on re-entry. You would have been getting out somewhere up here at 44.05. And you also could have, if you wanted to use Fibonacci's on this, look to get out at the first or second fib target from the earlier entry. So whether you got in and had a small win or small loss or break even, and then got in on the second wave, you had a nice little trade there. Let's just put the parabolic on here for comparison purposes. It also just barely got stopped out here and also got out pretty much at the same spot. The yen was also weak at the time, so you could have also traded the strongest euro on all time frames against the yen as well. You want to pick a number of pips per bar, and we have a tool called the ATR, which lets you do that. Here's 3 o'clock, and you also have a nice 2-bar pullback, just like we showed before. You go long when it closes green, and I usually wait for 1 pip above there. Stop here, and you can see it made a higher high, pulled back and started going sideways, went up again. You want to yank your stop, to pretty much near break even right here. And this one just took off nice and smooth up there. You might draw a trend line, wait for it to close underneath there, and you'd be out right here at 110.62. But whether you got in here on this bar or you waited for a breakout right here, even if you got in late, you made 30 pips. If you got in a little bit early, you made 40 pips. But using the currency meter and the range bar chart, you have a really clear focus on which ones are most likely to go. You can see from 3 to 4 it was strong, and then the yen had some strength here from 4 to 5, and then the weakness returned. So again, at 5 o'clock there, um, another good place to look for entries. And notice you have a nice decent pullback right here, even before 5 o'clock. What was this bar right here? 451. The euro. This is a wonderful pullback trade. Strong trend up, nice pullback. It might have been even a 38% Fibonacci area, which would even add to the probability of the trade, which it was. Found support there, and another signal of a possible reversal is when you have a pullback, a doji, a wick at the bottom of the bar, especially in range bar charts, tend to show reversals. Notice here, here, there were a bunch of wicks on the top here. This bar right here had a wick in this bar, and notice reversals after that. You don't know if they're going to continue or not, but after a decent sized pullback, this is the first pullback after a nice strong hour and a half trend. So a 38% pullback shows incredible strength, and even if you got out of here when it's kind of chopped around, you made 10 to 15 pips on that trade. Notice the currency meter, it wasn't 5, actually it was 455. The yen went weak, and even before that 450, the euro started getting stronger. So if you were a little afraid to get in on that pullback, within 5 minutes our tools were showing you that the euro was strong, the yen was weak. Now another one that was weak last night was the CAD. It was strong for most of the night and got weak here at 8. So when the strength comes back and then falls off a cliff like that, when the daily, weekly, monthly trend are down, you see some strength, or I'm sorry, weakness come back in around 9:30. Even if you missed the first wave of weakness here, it's pretty safe to assume, because all the time frame trends were down, to look to sell the CAD around 9:10. Now, which one was the strongest at 9:10? The dollar and yen were both strong. Longer term trend wise, they weren't the best. 9:10, unfortunately, the euro wasn't strong. But we do have quite a strong Swiss, and it's strong on all time frames. It had, it was a pretty choppy pair overnight, with the exception of about midnight to 2. It had strength for an hour, weakness for half an hour, strength for half an hour, weakness for an hour, and vice versa. But at 9, it was strong. The CAD was weak, and this is, a good example of a pair that most of us don't trade most of the time. CAD Swiss, weak CAD, strong Swiss. We'll just put a 6 pip per bar chart on here. Just because it's a great way of spotting entries that you wouldn't have on 5-minute charts or tick charts and so forth. Weak CAD, strong Swiss, and notice that you have a nice beautiful trend line here too, by the way. You see that? It's right around 9 that the Swiss gets strong and the CAD gets weak. That would be like right here, but the trend is up and you have a nice trend line there. You might really want to wait for about an hour and a half before it breaks down underneath that area, or you might want to wait for the next pullback up. You go short there with your stop here. It didn't really lead to too much. It came down 10 or 12 pips. You would have moved your stop to break even, or maybe even exited half your trade with 10 or 12 pips when it started to go back up. But if you took all those trades there, you really probably wouldn't have been hurt, unless you stayed in the first trade and got stopped out here. But once it broke down right here, you can see it fell 10, 20, 30, 40 pips. Again at 11 o'clock, not quite at 11, yeah, 10:55, the CAD got weak again, and even a little bit after 10, the Swiss became really strong. It was strong for about an hour, then it had weakness, and that strength came back. So you're anticipating this, and there's always people buying and selling currencies, and once breaks happen, the buyers tend to give up, and they're exiting their trades, their stops get hit, that causes selling pressure, and you had a long time to watch this one before the real break happened. But very nice, low risk, 30 to 40 pip win with very small risk. In the last half hour, the Swiss became the weakest one, and it appears that the pound and the euro were one of the stronger ones. So even if you missed, basically you could be looking for euro Swiss buys in the last hour, and even if you missed the first point where it took off, notice the Swiss about 11:20 became weak. That's somewhere right here near the bottom. Even if you didn't want to buy the little double bottom right here, you might have bought this 10-15 minutes later, and you can see it's up a nice 25 pips right there. And if you missed that trade, here's another example of when you have a relatively strong trending pair like this, and a 3-bar pullback, 1 bar closes up, you go long a pip above it. You're not up much in this trade right now, but you know your stop, which initially what might have been about 8 to 12 pips, is now, you know, you're only risking 3 to 4 pips in this trade right now. And as long as the euro stays strong and the Swiss stays weak like it is, you know, this could go another 30 to 50 pips. You never know. The 50 area here tends to be a resistance area, so you're almost up actually about 20 pips. You're up 16 pips so far, and you could exit the trade now or just kind of wait. But it's a perfect example, even during a dead time of the day like this. That's why we have class at 12. You know, when the currency meter is showing you that the Swiss is weak, you know, pretty much weaker than every other currency, and the intensity behind that weakness is there, you pretty much have a no-brainer type trade, as you can see.